that every one of you will be in good health. So today I'm going to tell you that how you can trade at the pre-market. So like this is 15 minutes ES chart, S&P 500 futures chart. So what you need to do, you need to first see the trend. So the trend is bullish because the price is breaking the structure, and every time when it breaks the structure, it is creating a high low. Means the higher structure is breaking, and then the price is making a high low. So what you need to do, you need to mark the structures, and this is the highest high for this swing. Okay, so you need to mark the demand zone. So last demand zone which created at 8 o'clock was this. Okay, so what you need to do, just mark this demand zone. Okay, your pivot levels are these levels. Another level is this, right? And this is the another swing level, right? So what you need to do, first of all, once the price will come inside this demand zone, 15 minutes demand zone, so just shift the time frame to the lower level. Lower time frame like 5 minutes or 1 minute. So I usually trade with 1 minute. The entry is 1 minute, and then I see the swing. Okay, so the price came inside this demand zone. This is the 15 minutes time frame. So now what you need to do, you need to switch the time frame to 1 minute, and you will be looking for the change of character. So for the change of character, you can see this swing, or even you can see in the line chart that the price is breaking this high. So this is your change of character. Because it's a pre-market time, means after the market opens, the momentum is there. Still there is no lunch, still the lunch time is a little bit, maybe around 1 hour. So what you need to do, you need to watch this change of character. So at this change of character, once the price will create the change of character, you need to see that where is your last demand zone. So after the change of character, you will be looking for this demand zone. So your entry will be from this demand zone. So you will go long from here, means you will buy, and your stop loss will be just below the demand zone. Okay, so this is the demand zone, body to wick. And what you need to do, you need to switch the time frame again, and you will mark your trade from here to 15 minutes. Let me stretch it down for you, and you need to take out the profit at the last supply zone, which can be this area. This is your extreme supply zone, and in between you can take the profits. Okay, so now we want to see how the trade will go on. So this is 1 minute time frame, your entry. So still your entry is not appeared. Okay, you are still not in the trade. So but you marked the levels. Okay, once the price, after breaking the change of character, you first of all you need to mark the time order block, demand zone, or supply zone. If you are in sell, then you need to mark the supply zone, and the most swing levels like the pivot levels or the liquidity levels, you can see. So the price is going away from you, so your entry will be here, right? So this is your entry point. So you are still waiting for the entry. So the price created the change of character, and after the change of character, still you are not entering the trade. You are waiting. Okay, now this is your entry. Okay, so you have already entered in the trade. Let me squeeze it out so you will see the trade clearly. And your first target can be this swing, which okay, let me see which was the swing. Okay, so this is your target, the first target. This is basically the price swept out this zone. So after the sweeping out, obviously it will go for the next zone, right? So in 5 minutes you can see this supply zone. This is really good area to take out the profit. So now what I am doing, I'm just stretching out my profit levels. So this will be 1:8 risk to reward. And after the entry, let's see how the trade will go on. So your entry is at 10:06, right? This is 2 minutes chart. For simplicity, I just created this one. Then okay, now you have already exit from the trade. So at 10:06 you entered in the trade, and at 11:14 you are get out from the trade. So you are getting in this trade 16 points. 16 points with two contracts will be $1,600, and you are with, and your entry is with one contract, so you can get $800. So like this you can trade whatever ticker you want to trade, if this is ES or NQ, Nasdaq, Russell, Dow Jones, Tesla, or whatever. So I want to show you another example for today's trade. Like today was July 24, 2023. So this was my trade. So guys, here is another example how you can trade with at the pre-market. So this is Tesla chart, July 24, 2023. So this is 15 minutes chart, and this is the candle for 9:15. So what you can see here, you have this swing low, and the price needs, if the price needs to change its behavior, then it needs to break this. Means the closing should be below this candle, below this wick, sorry. So what you can do here, you need to mark the 15 minutes demand zone. So this is your 15 minutes demand zone, and if once the price will come in this demand zone, then you need to wait for the change of character. Okay, simple as this. So let's see. Okay, so the price entered in the demand zone, and at the same moment price went above. So let me tell you how you can mark these levels in the line chart. So price has already created the change of character, and after changing the character, the price is moving away. So this is your change of character in the line chart. Okay, let me tell you that. Okay, this is in the candlestick chart. So in the candlestick chart, this is your change of character. So if you just move back with the demand zone in the line chart, so what you need to do, you need to mark the demand. So this push is basically here, this candle, okay, and the second push is basically the second candle, this big candle. So what you can do, you can just mark the demand zone, right, and you need to wait, because this is 1 minute. I will wait here for my entry. My entry will be here, and my stop loss will be below this low, or for the safe side you can mark this. So but what will be your target? Your target will be the major swing supply zone, or this is basically your major swing. So this can be your target, or the supply zone, right, and your supply zone is here. So you can exit here. So your entry and exit for the long position, your entry level is this, and your exit level is this, and your stop loss will be, as I told you, that your stop loss will be below this swing, right? So let me shuffle it for you. So this will be almost 1:5.5 just to reward. Let's see how this trade goes on. now you got the entry. Okay, for the safe side you can place the stop loss below it, but in that case your stop loss will be too big. So you need to get out here, okay, for the safe side. So, and this trade, even if you get out there, it will be $8.85 from the range of 255.18 to 265.30 cents. Okay, let me again play it for you. In this case you can get out once the price will be coming down. You can get out, because sometimes what happened, there is strong bearish candle can come, and the bearish candle, what it can do, okay, let me tell you what it can do. It can come to this level, this demand zone. Okay, so might be in options trading you will lose too much because of the time decay. So the price can come again to this demand zone and then go up, or if the bearish momentum will be there, then the price can reach to this demand zone. So you don't want that. Whatever, this is not the fresh demand zone, but even you can see there is a gap here. Okay, so there is a probability. So anything is possible. If the, it means whatever you have already gained you can lose. So just see that, okay, if the price is coming or hitting to the target, okay, so the price already hit the target and it has left this liquidity. Okay, so this liquidity has been generated. So in this way guys, you can trade, and you can, what you can do, you can squeeze down your supply zone. So for the safe side you can just squeeze down your supply zone. This was because this supply zone is still not mitigated, already mitigated in 1 minute. Okay, so let's see if that target will hit or not. Okay, that target also hit. So if you just keep the trade, you can get the 1:1, 1:5, or even 1:6.5. So this can be your almost $10 trade from the time your entry was at 9:53 and your exit is at 12:05, almost 2 hours 10 minutes. So guys, this is the second example which you need to see before the market opens. So let me show you another example with Nvidia. So guys, this example is with Nvidia 15 minutes chart. So you have, before the pre-market, this is 9:15 candle and the time frame is 9:15 minutes chart. So you have this swing level and the liquidity, just because there is a wick. So in 5 minutes you can also mark the liquidity and the supply zone. So just for the safe side, okay, let me mark the supply zone. In this will be your target if the price will go up or bullish. So in 15 minutes what you are looking right now, that you have this swing level. So this is the liquidity which you need to swap out. The price needs to sweep this liquidity. So this is your sell side liquidity, and the demand zone which you need to mark in 15 minutes will be this, because there is a big wick. So I usually mark the demand zone like this. Once the price will come inside the demand zone, I will wait for the change of character. Okay, so two things happen at the same time. The price entered in the demand zone, and also the sell side liquidity has been taken out by this candle. So now what you need to do, you need to shift the time frame to 1 minute, and you need to wait for the change of character. Okay, so you can also see, okay, this is the double top. So once the price will clear this level, you will get the change of character, and the price I think has already done it here. Okay, so the price has already changed its character. And now what you need to do after the change of character, because I need to make it clear here. So this candle, basically this is the candle which has been which created the change of character, this push. Okay, so what you can do, because this is really small candle, this the doji candle or the base candle, this base candle. So what you can do, you can mark this base candle as the new demand zone from where you need to buy, you need to enter in the trade. Okay, this is your that means the main demand zone, and this is your entry demand zone. So what I'm doing, for the clarity, I'm just moving this back side. So your entry will be from this level, you will go long from here, your stop loss will be below the demand zone, and your exit will be, what you can do, you can see where is the swing. So the swing is there on 5 minutes. Let me mark the swing level. So your major swing is here. Okay, so this all the liquidity you can see, and before the pre-market, this is your maximum level or the major swing. So what you can do, you can mark this supply zone just for the safe side. Once the price will reach to this supply zone, you can get out from the trade. Let me mark for you. Okay, so now what you need to do, you need to wait for the entry. Once the price will go up, then you will, and then come back again, then you will enter. Change of character is here, your stop loss is here, and what will be this trade can give you 1 is to almost 2.7. so this is also the liquidity zone or supply zone, you can say. Before that, there's so much liquidity. So what you can do, if the price will break, you can extend your target to this. In that case, you can be 1 is to 3.25. okay, let's see what the price will do. Okay, once the price clear this change of character, and again in the same candle you can enter. Okay, so you have, because you place the trade, the price went up, this was the high, this was the opening of the candle, and this was the low. So this once the price enter this on this candle, you can enter in the trade, because your entry was here at around 443.37. okay, so let's see how this trade will go on. The price entered again, but it didn't hit your stop loss. Okay, so always remember, you need to put the stop loss 1 or 2 ticks below. Okay, in the price you can just manage how many, because this is 442.13, so I'm just 441 because round figure. Okay, so this was 442.13. so what you can do, you can place the stop loss at 442. This is the round figure, so 442 or below, or just below 442. okay, so let's see. Okay, so if you are doing options, so you will be in profit, because the trade is going in your favor. Okay, so your first target has been hit, which was around 2.1 is to 2.8. and at the same time, if you see the price, this is the liquidity which has already been swept out. Okay, so now this was the buy side liquidity. Okay, so this buy side liquidity has been swept out, and the price has already tried to clear this supply zone. This supply zone has already been mitigated. Okay, this is not now this is not the fresh supply zone now. Okay, so you can exit at this place for the safe side. Okay, let's see if that area has been, this supply zone has been mitigated or not. Okay, let me see. Okay, what the price did. Okay, if you see the line chart, the price is coming to this demand zone. Okay, once it will, okay, the price is just mitigating this demand zone, and once it will mitigate, it can go up again for this supply zone. Okay, now the stop loss, if you take the trade from here, your stop loss has been hit. So what it is doing right now, let me tell you. So this gap, okay, fair value gap, it came to get the fuel from this fair value gap. Okay, so you can have an entry again if you want another trade. So you can enter here. The target can be the first area, because now this is your liquidity. Okay, buy side liquidity is this one, so you can exit there. So still, if you have this trade, then you can again 1:7, right? So let's see. Okay, so first target has been hit, and now also the second target. So if you will go with this 1:7 or whatever, 1:7.5, so in this way you can trade at the market open. So you need to see that where is your liquidity, where is your demand zone. So once the price will clear that demand zone or will enter in the demand zone on 15 minutes, then what you need to do, you need to switch the time frame to the lower time frame, like 1 minute, 5 minutes, and from that time frame you need to watch for the change of character. Once the price will change its character, then you can mark the fresh demand zone. Whatever is fresh demand zone, you can mark, and below that demand zone you need to put your stop loss. Your first target will be the buy side liquidity. Okay, you can see the price ate this buy side liquidity and then came down up to this fair value gap. Okay guys, so in this way you can trade, and this is the same criteria for the sell trades. So hope you will get something from this video, and if you like this video, then kindly subscribe this channel, and hopefully I will give you some more videos with the same strategies. Thank you.